let's kick off with market sentiment as it stands today and how you're reading the market picture. We've got equity markets, as I said, stronger. The local bourse is surging ahead there by 1.6%. But if you read into what we saw on Wall Street last night, it seems that the US market unconvinced that the European picture is stable at this stage. What are you reading into trade today?
Afternoon, Samantha. I think, we're really in a very uncertain market at this point in time. Locally, we've seen a very, very strong performance. A lot of that on the back of potential short covering going into futures closeout today. But when you're looking at the broader macro picture across the board, yes, yesterday we had a fairly strong day in the US, but traded off those days' highs to close slightly lower in terms of from the day's highs. And that really speaking to us saying that the market's not terribly convinced that the European situation is resolved. That being said, it hasn't stopped the market from rallying fairly strongly on the back of any positive news and sentiment that comes out of Europe. And that's really caught a lot of short traders on the back foot, forcing them to cover their positions.
The market has been quite reactive, as we say, and any piece of good news and we see a positive turnaround in equities, and any piece of bad news we see the opposite. But when it comes to the rand, it has been weaker despite the trend that we're seeing in the euro at this stage. Just BNP coming out today saying it's unwinding its 70 billion euro fund and risk-adjusted assets, and many saying that you could see leverage players now having their credit lines cut in terms of exposure to carry and risky trades, and this won't bode well for economies like South Africa, and we could see the rand weaken further from these levels.
Samantha, I think the rand has certainly been the recipient of fairly strong flows over the last few months on the back of still positive real returns that investors can enjoy in South Africa relative to some of the other domiciles globally. On the back of that, bear in mind that the rand generally tends to track the euro. We saw that euro decisively break through that 140 mark and now is really kind of stalled between the 135 and 140 mark at around 137. We have, however, seen the rand continue to weaken, especially overnight, and currently trading around 742. I think, really linked to what's happening in Europe, if we see that situation deteriorate, the potential is certainly there for the rand to continue weakening. And if we see that rand breach a 750 level, I think there's still the potential for further weakness beyond that point. Up until that point in time, likely to stay within this range until we see further developments.
A sentiment echoed by other currency analysts today. Let's take a look at the equity market, what's taking place there when it comes to earnings updates. Investment bank Investec coming out saying that it expects a flat first half of the year hit by impairments and also weaker performance of its investment banking activities. What did you make of this update in light of its recent purchase of that investment firm over in Britain?
I think, Samantha, if you really look at Investec and what they've put out in this, not really too different from the previous update that they had put out with regards to their results. The real kind of crown jewel in Investec right now is that asset management and wealth business, and that's really where they're getting a very strong performance coming through. But they have cited very difficult markets, and that's really a theme that you've seen across most of your financial sector. Investec also struggling specifically with regards to their principal activities, which are under pressure, and their property division as well. I think also citing bad debts, and on the back of this, what's positive out of the Investec announcement is that they are gearing up in the areas where they are seeing strength within their business, possibly to leverage against the strengths that they currently have within the business, and that's where we're starting to see the acquisitions, as you mentioned earlier.
And although we have generally top 40 stocks trading high today, it seems that investors, have taken well to the news. We've got the stock trading up 1.8%, 48 Rand 54. At this level, do you think it's an opportunity to get in or wait for a pullback from here?
Samantha, it's really difficult to say. I mean, with Investec, again, we like the business. It's a really, really good business at this price, not necessarily looking particularly cheap compared to its peers. And we're failing to see what the catalyst for growth would really be. So a little bit of a wait and see. And I think our analyst Nazim at this point in time has a holdout on that stock.
Let's take a look at the property sector now, because Capital Shopping Centres are jumping 3% after Society Generale saying that it's one of the few real estate firms that it will buy into in the UK. What is your take on exposing yourself to UK real estate firms at this time when we see the UK economy on the brink of a possible another recession?
Really difficult. I mean, if you look at capital shopping centres with their concentration in Europe, all you need to do is look at the data coming out of Europe. We saw data earlier this morning in terms of their retail numbers down 0.1% from a previous number of being absolutely flat. Now, that really speaking to a decline in consumer confidence. They also will have been impacted by riots. And then on the other hand, you've got inflation at around 4.5%, where wages are not necessarily correcting. So your consumer in the UK under a fair amount of pressure, having exposure to that specific property market may be a little bit risky, but not too different to a generally bleak outlook for the global consumer. The property sector in general, I think many investors look at property as an asset class, almost as a proxy to some of your bond markets, and that's really behaved very much in line with what we've seen locally in the bond market, where we had a lot of strength. And on the recent sell-off we've seen over the last 2 to 3 days, we've seen the SA property sector come under a lot of pressure as well.
Mohammed, before I let you go, we've got just over an hour till futures close out. What is your expectation for the local trade up until then?
I think our expectation at this point in time is we certainly expected it to trade stronger earlier this day, and positioning for the futures closeout. From where we are at this point in time, there are strike concentrations at around the 27 and the 28,000 levels. So as we gravitate closer to those levels, you could expect additional volatility. But at this point in time, we're pretty much around 400 to 500 points away from those strikes. And on that basis, we would expect another, let's call it 100 points or so. So let's see how this pans out. It is certainly very busy going into futures closeout.